folks, welcome to the Midday Report with Dan Frio. I am Dan Frio, and here's your Midday Report in regards to real estate, housing, and especially mortgage rates. So I don't know why I call it the Midday Report, because I do it between noon and 2 or 3 or when I have a break in the time. So here's where we are. We were up big this morning, but we're still up. Okay, I don't know what this anomaly down here is, but that is what it is. So if you guys are used to my channel, you see this every morning. What's going on in the MBS market? We're getting back a lot of the stuff that we gained earlier this morning. So mortgage rates will probably won't continue to get better today. But I have some news coming out. I have a video actually coming out later today or tomorrow in regards to my recession fears. Now, I'm gonna preface by this. Yes, housing prices are crazy. I'm expecting a recession to happen, but I never said that I expect home values to crash. There's still a huge supply-demand issue. So a lot of what this is doing, it's pushing up rates, pushing up prices. There's a lot of fear in the market. It's going to pull a lot of people away from bidding on those homes, and that'll help you. I can guarantee you that'll help you. So instead of having 30, 40, 50 bids on a home, there might be 2 or 3, which is normal. Okay, so that's what we're seeing there. So here's what's going on in the MBS market. Again, how you read this is the green numbers mean, or the green bars mean mortgage rates are getting a little bit better. Red means they're getting a little worse. Okay, so that's basically what's happening here. And you can see there's a little orange dot here that one lender or 2 lenders or so reprice. And when I say reprice, that means they readjusted their rates for the day. You can see down below, we've only had 2 people readjust their pricing today, but it got better. Okay, so this is what we have on the housing front or the rate front. Now let's get over the headlines. What's causing a lot of this, a lot of the pullout of the mortgage-backed securities market? Why we were up about 30 or 40 this morning, and why are we down to here? Well, as I always say, there's a correlation between bonds and stocks. So what are we seeing right now? We're seeing stocks coming back. This was down huge, 200-300 points earlier. Now it's only down 180. In today's world, I'll take it. The NASDAQ is actually in positive territories, and the S&P down a fraction. So what are we seeing? We're seeing a migration. People are just moving money back and forth fast. You got to remember, there's a lot of institutional traders. They're not working with like you and me. We buy a share of stock or 2 shares of stock. They're buying hundreds of thousands, if not millions, if not billions. So when they move out of the stock market, they're usually putting it somewhere to gain some interest. What do? They buy bonds. One of the bonds is a mortgage-backed security. So as we see the markets here going in a better direction, we're going to see mortgage rates or rates go a little bit higher. So conversely, they're getting out of the stocks into bonds, out of bonds into stocks, and so forth. The bright side of a lot of this stuff is right here. Existing home sales fell in April to the lowest level since the start of the pandemic. And you can see this is May 19th, 2022. For those guys that are out there saying, Dan, all you do is pick the headlines you want, and a lot of it's dated. Well, my watch says it's the 19th, and this says it's the 19th, and it's the same year. So again, we're not saying that house prices are going to plummet. The basic point here is the home sales fell in April to the lowest levels. Okay, so let me dig into this just real quick. If you guys have any questions, please ask them. But join us live tonight. I do a live version of just an open roundtable. Love to have you guys join us. Just ask any questions and make any comments that you want. It's 7 o'clock tonight, Central Standard Time. It says previously homes fell in April to the lowest pace since the COVID pandemic. We are moving back to pre-pandemic sales activity, which is good. Tight housing keeps the prices higher despite interest rate. The median prices is increased 14% from a year ago. All that data is there. Existing home sales declined 2.4% compared with March. The seasonally adjusted to 5.61. And again, guys, when you're reading this data, make sure you read the fine print, because a lot of the headline news is just clickbait. Okay, so what I'm trying to explain to everybody is, yes, the economy's slowing down. It's got to slow down. It's going like gangbusters. So the Federal Reserve is jacking up rates. I think the market is a little over its skis on this point. I mean, there's been a dramatic move in stocks as well as bonds, and you can see where most rates have doubled in the last 6 months. I've never seen that before in 33 years. So that's going to take a little bit of time. You know, we have a cruise ship here. You don't move the cruise ship like you do a little ski boat. So it's going to take time to move this thing. So what the Federal Reserve is doing, it's starting to play a role. Another piece of the puzzle that you might have overlooked was you have Walmart and Target earnings came in terribly. They didn't expect a lot of people not to be buying certain things, and they're basically pulling back now just to buy food, the necessities, and gas. So that is one piece of the puzzle that's going to start to really retract things. My hope is the Federal Reserve doesn't overdo it and tighten up things so much that when everything does turn and people realize, oh boy, you know, I don't have enough money to do these things, they don't overdo it. Okay, that's that part of it. So if you have no questions, that's all I got for the market update for today. If you would, please, if you're watching this video, and I see there's a good amount of people watching the video, I'll ask you to do one thing for me, and that's it. Just give the video a thumbs up. It helps the YouTube algorithms. That'll help me ultimately. So that's it. If you want to subscribe to my newsletter, like I said, it's free, and it's down below in the description where you get this news and more. So thank you so much. Oh, we got a question. If you guys have questions, just ask. That's why I'm here. Let's see what it is. If you don't mind me posting this, how much purchasing power has been eroded from borrowers with the rising interest rates from 3 to 5? That's a great question. I'll do a video on that. I know the tough thing is it's your loan amount or the price of the house. But I forget who it was. It was Sir Ashley or Investing with Steve. One of them did a video this morning. I'll try to link to this. I think it's Investing with Steve. I had him on my channel just the other day talking about credit scores. He's a realtor down in southwestern Florida, and he had a thing this morning that said the average house payment is going up. I think if I recall it right, $600 a month if you didn't buy it. Now, here's what I want to say though to a lot of people: if you bought, a lot of people they're thinking these rates they're going to change their house payment. Once you buy, guys, your house payment isn't going to change unless your taxes go up a little bit or your insurance. So it's for those out there that are looking to buy. But I'm honestly going to say the purchasing power, I don't know. I can do a video on it. I'll do some research. I just know the average house, which is tough because we do a lot of loans in California and they're 700,000-800,000. And then other parts of the market are 200,000-300,000. And then there's pockets, especially in the Chicago area, where we get $1 million, $2 million, or 80,000. So it's all over the board. So let me see if I can dissect some of this data for you, logical thinker, and come up with a video that I can come up with in the next couple of days, at least, you know, show you that part of it. Oh, we do have a live event, and that's one of the things we're gonna talk about. Nico is actually at home prepping for that today. So how much can you truly afford? That'll be tonight's video and our live event at 7 p.m. Central Standard Time. So I hope you join us then. So other than that, if there's no more questions, I am gonna get back to work because all of a sudden we got really busy. So thank God for that. Thank God for you guys. So thanks for watching. If you would give us a thumbs up, God bless, take care, and I hope to see you